What's the plan? What are we looking at? What's important? Big picture. Okay. Cryptos. Let's start with that. Red line. I will buy the dip in ETH when it gets to this red line. This red line is a beautiful red line in my opinion. That's the ETH to gold chart. Copy this. Copy this chart, guys. Okay, use it. All right. I share everything. I share all my knowledge with you guys. There's nothing that I hide from you. This is what I'm doing. That's my plan. You guys can choose whether or not you want to go with my plan or not. But I'm just sharing with you my plan, and hopefully you guys learn about risk management through my plans, and maybe you guys can come up with your own risk management strategies. That's what this is all about. We're not an alert service. I don't want to give you a fish. I want to teach you how to fish, and so that we can bounce ideas and grow as a community. Okay, that's the whole point of all of this. But anyway, ETH to gold. If it gets to that line, I am definitely going to buy the dip when that happens. Same thing with Bitcoin. I was going to do 2-to-1 ratio buying Bitcoin over ETH. I might change that to more like 50-50 because I'm believing in more and more on ETH. Maybe 2-to-1 ETH to Bitcoin. I don't know. But I will be buying both at this red line. Okay. Bitcoin Gold also has a red line. That one connects. That one is a trend line from 2016 all the way to 2020 COVID lows. And if you continue that line, that's where it is. All right. It just makes risk management that much easier, because if we buy at that red line and it closes like 2 or 3 weeks under that red line, at least we can get out with a very small drawdown for a huge potential gain. Okay. So it's all about stacking that reward to risk ratio in your favor as a trader. Okay. That's what we're here to do. And if we miss the trade, so be it. There's going to be another trade later on. Okay. FOMO is like the worst enemy of a long-term trader. Okay. Trading is a marathon. It's not a sprint. Okay. So that's the reason why I exercise that risk management. Okay. I'm using this line as a risk management tool. All right. So that's the plan. The plan, ETH, Bitcoin still, ETH to gold, Bitcoin to gold, we're going to buy at that red line right there. Okay. One of the indicators that we're looking at, the dollar. All right. The dollar is still, is still in an uptrend. However, it's very possible that this was the top, at least for this year. I do think that the dollar will go up to make higher highs. Maybe not this year, maybe end of next year, 2024. Okay, currencies rarely move just in one direction like that, in a straight line. Okay, multi-year moves, they will consolidate, and it does chop around. It does have a tendency to chop around, and they continue its move later on. The currencies generally make their cycles are a lot longer than like stock cycles, for example. And again, it's because it's a bigger market, much harder to turn around and stop the momentum of something like the Titanic than it is a tugboat. All right. So that, okay, is a big tell. And again, what I'm looking at is the 18-day moving average. It seems to be a thing in currencies. Again, you can look at our Forex channel on Discord, and you can actually see where the 18-day moving average is used as a pivot in a lot of different currencies, not just in the dollar, but also in the euro, also in Canadian, also in the Aussie dollar. It's just something that shows up a lot. And so I'm just going to keep using it until it stops working. All right. So definitely risk off if we break that 18-day moving average to the upside. All right. Euro, same thing. Euro risk. Right now it's over its 18-day moving average. If it breaks below, I think that is going to be a risk-off signal. We shall see. ZF, again, look out for ZF. If this goes up, if ZF rallies up, that's going to be a huge risk-on signal, as it will it will steepen the yield curve, and therefore it will make the cash is trash scenario, which means it'll be less and less favorable to hold US dollars. And so there's going to be some asset buying. There's going to be risk on sentiment if this breaks out. If this breaks down and yields invert more, then we're going to see a lot more risk off sentiment. Okay. And actually that is what we're seeing right now. And the 30 and 10, this is what the institutions look at, often ignored by the media and by those quote unquote crypto gurus, they always look at other yield spreads. They don't look at the 30 and 10. But in my opinion, the 30 and 10 gives the highest quality signals. It doesn't give a lot of signals, but when it does, it's pretty high quality. This coming down, definitely not good for recession fears or stagflation fears. Okay. Recession fears, very not good. Okay. So this coming down means that people are expecting growth to slow and possibly more contractions in the economy. Okay, so something to look into. IVWI, this is our growth to value ratio, still in an uptrend. If you're going to go long on stocks or equities, it's best to go long on tech and growth. Okay, according to this chart. Okay, but I'm not going long on stocks just yet. Okay, I'm just saying if when we're compelled to, this suggests that tech and growth will outperform. All right. Next part of the plan, since we're talking about bonds, I am adding TLT to our plan. When it gets to that 115, 116 zone, I will be buying TLT call spreads that are 6 months out. The skew is good. And again, where am I getting that from? I'm getting that from our copper to gold, not gold to copper. Okay, listen very carefully. I said copper to gold ratio. Okay, copper to gold ratio times 1,000 tends to be a good leading indicator for where the 10-year Treasury wants to go. Right now, that ratio is at 1.95%. No, 1.9595. So we're, it suggests that the 10-year Treasury should be closer to 2%, which means TLT is going to go up. But I do want a quality entry because I do want to lean into this trade. It is a high conviction trade. I am looking for 115, 116 to enter into 6-month call spreads. Okay. So that's on the bond side. On the equity sides, nothing has changed on the equity side. I am still waiting for our high quality buy zones. I will be buying more SPY shares. I will start legging in in the 360s. I will buy way more at 342, and then under 340, I will still buy those 1 year in the money calls on SPY. I'm still shorting the indices if we get to this red line right here. Okay. So that's 4,200. We're close. Okay. If we get here, okay, I will start buying, scaling into 3 to 6 month put spreads. I'll scale in some more here at these levels. That's so anywhere from 4,200 to around, let's say 4,300. And if it closes 1 or 2 weeks above this, I will just get out. Okay, so that is still the levels that I'm still looking to build those put walls at that level. Okay, so that part of the plan has not changed. Tesla, adding this to our daily plan, daily watch as well too. I am going to short at that red line right here, just like I did back in April. We made good money on this. It was like a 100 to 200% trade. I will be doing the same thing here with Tesla put spreads 3 to 6 months out. Okay, that's Tesla. What else? HUT. Man, this thing still keeps running away. I still have the same plan for this. I still have my alert at 165 or so. I mean, it barely. I should have chased it. Remember how we were talking about chase? Well, we don't chase at Checkmate Trading. Okay, we don't chase. But man, it would have felt good to chase then. It would feel good now. But again, trading is a marathon. It's not a sprint. I will start legging in at 165 all the way down to let's say the 120s or so. Maybe every 10 cents or so I leg in. I might be doing that. Okay, for HUT. I still have HUT shares, and I'm still short those calls for January. The January 5 calls, I believe. Right? Is that the ones I'm short on? Yes, the January 5 calls short. So I still have that. EWT, I still have my position in EWT. It recovered its losses and now it's in the gain. So we'll see if that continues or not. But just so you guys, peace of mind, I still have the 49.40 put spread for December. That's long the 49, short the 40. I still have that position. I still have my DIA position. That's a Dow Jones Industrial Average ETF. I still have the October put spreads, the 300, 290, long the 300, short the 290 put spreads. I'm still in FEZ, Eurozone ETF. I'm still in the Novembers. I am long the 32, short the 27. That's the 32.27 put debit vertical on FEZ. I didn't show you HUT. I'm short the January 5 calls, just so you know, peace of mind, just so you know what I have, just so you know that I'm not lying to you guys. UVXY, I'm still in my UVXY call spreads. UVXY is the VIX futures 1.5 times leveraged ETF. I do think that the next leg down, we're going to see an outsized move in the VIX. I told you guys about this in our previous videos. I do think that a lot of the shares that were bought in the last month or so, the huge institutional block orders, they are under hedged because since then, every sell-off that we've seen in the market, we've seen a very small VIX spike. So I don't think those new shares are hedged as much. And so when all those new shares need to get hedged, when all the institutions rush to hedge those new shares they bought, I do think that there's going to be an outsized move. It'll be a much bigger VIX move than what the sell-off will imply. And so that's why I'm still in these December 14.24 call verticals. That's long the 14, short the 24, and then my original 15.20 vertical call spreads, long the 15, short the 20. So that is my plan. Again, of course, I already mentioned this in the beginning. The gold, when it gets to 1680s or so, I will enter along on gold as well. Okay, so that's also part of the plan. Some of the other stocks. Ford, I'm still looking at Ford. If Ford comes down to $12.95, $12.95 seems like forever. But okay, well, if it does, I will be buying there. What about other parts of the plan? I mean, there's some parts of the plan I don't go over every day just because, I think the chance of it getting to those levels are not that high. Oil's coming back up. If oil comes back up to, again, that 118, 120 zone, I will be buying those put spreads on oil here. So, okay, that's part of the plan too. Again, gold at 1680 or so. I will be buying call spreads here. I'll be going long if it revisits that. Okay. What else? Oh, and also too, I'm not sure if I'm going to be buying Lockheed Martin or not yet. But if you want to play the increased military conflicts around the world, this may be a play worthwhile. Again, if you're an aggressive trader, you may want to start scaling in at 395-ish. If you're a patient trader, maybe around 374. Again, I have not added this to my personal plan yet, but it's something to look at. I will be monitoring this a little bit more closely. So there you go. My indicators, my positions, my trade plan. Boom. Checkmate trading, baby. Any questions, comments, rude remarks? This is your time.